Abdulrahman, how are you doing this morning?
Yeah, morning. Thank you. Yeah, doing very well.
Thank you. I'm sure you're doing very well because we saw profit before tax up fourfold in your half-year results. It was at 7.5 billion naira, and though it was slightly below the 7.8 billion naira we saw in Q1, the numbers are better than we saw last year. Now, some analysts feel the results are mixed on a quarter-to-quarter comparison, while others feel the Diamond Bank's underlying performance is coming through finally. What is behind these results?
Okay, we're very happy to announce those results. And what is most important to us is the consistency and the fact that we have now a sustainable profit trend of our performance. And if you recall what we told analysts from last year, we've gone through our cleanup exercise. And now that we are done with that, we are coming through with our fundamental performance as an institution. You do recall that we have a very low cost of funds as an institution, and therefore we're able to build on that and begin to establish our business as a key player in the institution. So we're very happy with our performance, and consistency is actually the watchword. We don't want too many sporadic performance where you saw a big loan going into the books the last year and then all the way up. No, we want to see consistency. So you saw a 7-point-something billion in the first quarter, PBT. You see another 7-point-something billion in the second quarter, PBT. It shows that we are here to stay for the long run.
Like you said, Mr. Abdulrahman, we're not seeing some of those non-performing loans that sort of overshadowed results last year. But I'd like to point out loan growth was quite impressive. We saw a 15% quarter-on-quarter growth in loans to banks and customers. And of course, looking at the year to June numbers, it stood at around 25%. How much of this lending is to the real sector versus securities?
Well, actually, that is a good part of our business. You do know that a lot of Nigerian banks, and Diamond Bank very much so, have stopped lending into what you call the capital market and the bubble in that space. So all that you saw in terms of loan growth were actually into the real sector. We're not talking about financial instruments. We're not talking about maybe securities and all that. No, we're talking about day-to-day customers coming back into the system, borrowing money either for import finance or to set up their infrastructure all over again, or to actually begin to run working capital. So what we are seeing is actually a return into regular business, and all the lending that you saw were into the real sector, nothing at all into financial instruments.
Well, how did you manage cost management this time around? Analysts say that cost management, how banks are managing costs, is something that we should really be looking at right now. Looking at your results, we saw expenses up about 8 billion naira. Can you shed some light on that for us?
Well, we're going to have a lot more discussion in the area of cost. But for us, the key ratio actually is not whether the quantum of 8 billion naira increase in cost, or whether, for that matter, it was 5. I think the issue is to say you need to spend money to make money. So there is a more important ratio, which we call the cost-to-income ratio. Last year, we were somewhere around 67% of our cost-to-income ratio, and that we've been progressively taken down. As of today, we are talking about 53% in terms of that ratio. And you recall that we had told analysts last year that in this current financial year, we are going to make sure we keep that cost-to-income ratio below 60%. And to start with 53% in the first half, I think we're already on target with that.
What about your return on equity targets, Mr. Abdulrahman? I mean, analysts say that that half-year results confirm a greater than 10% return on equity target for 2012, which they feel might be a little bit conservative.
Well, I mean, that's good news to say that we're now moving from maybe not performing to now being conservative with our projection in terms of our returns. I think analysts should understand that we would rather not overblow our expectations for the year. Remember, this is just the first year after the recovery from what happened last year. So we are trying to be as cautious as possible and put out some numbers. I think we had indicated that our return on equity for this financial year will be above 10%. And what we've achieved so far is clearly above 10%. We'll keep those numbers like that, but I would like analysts to stay on this page and begin to see what will come up shortly. We are likely to have an investor conference call by next week, and we'll share with all analysts our projection for the rest of the year. But happy to say that as at half year, we have been able to meet and surpass our objectives in terms of return on equity. So our shareholders, are in a better position today.
Well, looking forward to the next half of the year, should we expect any M&As from Diamond Bank? Of course, we saw that you sort of lost out on Oceanic Bank to Eco Bank last year. Maybe one of the nationalized banks that AMCON is looking at putting up for sale. Are there any M&As we should expect from Diamond Bank?
Well, I don't know when this question will stop coming, but I suspect it's part of the business. There are normally two broad ways to grow your business. You either do an organic growth, which is grow your business from day to day by building your branches yourself, or you do an inorganic one, which is the kind of examples that you have given. We have not ruled out anything. I mean, for members of our shareholders who were at the last shareholder meeting, we actually got some approvals in place to say if we see anything that is cost effective, something that is value adding, something that we believe has a compelling reason to do an MIA. Why not? I mean, we're in business. We're here to try and make money. But for now, there is no particular target. And for now, we are working very well with our organic growth. And there is no issue at all about how we are going to get to our destination. Recall that we had said that we want to work with the best people as an institution. I want to deliver the best result to our shareholders. And that we are on target right now.
Well, thank you so much. Thank you so much for coming on the show to give us a take of your results. That was Abdulrahman Yinusa, a CFO at Diamond.